take a buck, we shoot it full of steroids, we call it leverage.
Everything and more has been completely wiped out.
The Dow traders are standing there watching in amazement, and I don't blame them.
That's not right. How can the price be going down? Something's wrong.
Their estimation was that by 2 o'clock that afternoon, $5.5 trillion would have been drawn out of the money market system of the United States, would have collapsed the entire economy of the United States, and within 24 hours, the world economy would have collapsed.
History is repeating itself. Since 2008, the market has created a so-called recovery. However, everything is now coming crashing down. It's pretty clear right now that we are headed for a serious crisis, perhaps larger than anything we have ever had. The big thing I want to emphasize for this is not to over-speculate, but realize the dangers that we really can face. The entire economy is built on a system of debt. Politicians will always talk about debt, creating different ideas on how to reduce it. However, there really is no definitive solution to ever get rid of debt, because debt is the system, and the system is highly addicted to debt. Right now, we're seeing stocks continue to rally, to continue to make new highs, despite overwhelming amounts of unemployment, reaching in some states over 30%, meaning almost a third of the real population doesn't have a job and is relying on the generous welfare benefits from unemployment to even keep the system propped up. But that can't last now, can it? So when it comes to stocks, everyone has two questions. Why haven't stocks completely imploded to extremely low levels, challenging their '08 levels or even lower yet? And that answer is very simple. The market is hoping that the coronavirus issue will be solved by a vaccine or more openings so new businesses can open up. That is something that's really holding its weight. Market is speculating. Also, the market is anticipating the Fed to pick up the tab, buying ETFs, buying bonds, bailing out companies that need it. So that's the real reason. The government and the Fed is going to assist. And the only way it can do this is with massive amounts of printing, dwarfing the amount of bailouts needed from '08. Now, when it comes to when the stock market will collapse, again, I would say we're not too far from that. So we know from a technical perspective, stocks are clearly overvalued. But let's look at the fundamentals. Really, when we begin to piece together industry by industry, we see the massive impact and revenue loss that the coronavirus has already inflicted. Even take a company as big as Google, which is now going to consider making cuts to its workforce, cuts across the board. When the most cash-rich company on the planet and a massive giant is starting to make cutbacks, the world needs to pay attention. Also, we can look at other companies like Disney, which have experienced a massive amount of revenue loss. And then the list goes on. Oil industry, restaurants, a vast number of industries has been devastated by the coronavirus lockdown. The bleeding is starting to be inflicted across the board. So no one can say for sure exactly when this meltdown is going to happen. It could happen very soon, or it could happen later in the summer. However, reality will set in with the market, and they will begin to realize the overvaluation of these companies, and the entire thing will happen very rapidly, and we will see very quick declines in stocks once this thing does start to get going. The other thing I want to emphasize is the real estate crash that is likely to happen as well.
Is warning that the U.S. housing market is now in danger of what they're calling large-scale disruption, and it's blaming the Fed for this, at least in part. And that's where we want to start our conversation this morning with Steve Leisman, who joins us with that story. Steve.
Good morning, Andrew. Yeah, massive Fed purchases in the mortgage market that were successful, by the way, at rescuing a part of the market that was in severe distress has now appeared to have caused, at least in part, severe distress in another part of the market among the independent mortgage lenders. The Mortgage Bankers Association warning that many mortgage lenders could simply go out of business because of margin calls and the unintended consequences of these Fed purchases.
Take a buck, shoot it full of steroids, and call it leverage.
So, it's a very interesting thing to see 2008 repeat itself. Once again, we have the possibility of a mortgage-backed crisis. The Fed trying to intervene, slow the bleeding. The bubble, again, is ready to burst. And lower rates would mean suicide for the mortgage industry. A massive disruption home prices could have under this, or even worse. It's really not surprising to see these things play out the way they are. Really, history is just an endless series of bubbles. Injection with debt. If the mortgage industry really does collapse, it really could usher in a massive depression. Something like we've never seen before. However, we're really not that far from that as we are right now. I think that if this does happen, it could even happen within this year. I would not be surprised to see mortgage-backed companies starting to default and even file for bankruptcy and completely implode altogether. This would mean trillions upon trillions of more dollars will be needed. If people don't get back to work, can't pay their bills, can't pay their mortgage, can't pay their rent, the problem doesn't really require an economics degree from Harvard to really understand how everything is intertwined and how everything is going to react with a domino effect. It's very clear that the mortgage industry could be the real thing that sets us into the Great Depression. I fear for my generation and future other generations and how they'll be able to handle this debt. It will take trillions upon trillions of dollars, possibly, to bail out industries, to help people with their mortgages, pay their rent, just to get by on all their bills. The government and the Fed are now the solution to everything. Negative rates aren't something that's impossible. They already exist in places like Europe. Let's look at our current rates. Really, since 2008, rates have plummeted almost to near zero. We've had almost no 0% interest rates for quite a while, and then rates started to tick up as the economy started to recover, and then they were already coming down, and then the coronavirus led to the interest rates to be slashed to near nothing, which they are right now. Lower interest rates in theories increase the demand for lending. So how do we create another future bubble? Well, most likely what the Fed does is manipulate the interest rate even lower. Some are saying that lower interest rates even below what they are right now in America is impossible, but others are even starting to say it's inevitable. A lot of the market is even starting to price them in as a real serious reality. Negative interest rates would mean a lot of different shock to various equities in different ways. You can definitely see how it will really try to spur lending as much as possible, likely creating a new bubble in different assets, and also possibly skyrocketing value of things like gold, perhaps, or metals, silver, and others. It's going to be very interesting to see if this actually does play out. I don't know for sure, but if I had to be a betting person, I say that negative interest rates are possible, although they've never been done in the United States by the Fed. So this is uncharted territory. This is something that we've never ever seen happen before. Yet, it's something to seriously consider as a possibility and watch out for.
Money's a bitch that never sleeps. And she's jealous. And if you don't pay close attention, you wake up in the morning, she might be gone forever.
So as the phrase goes, money never sleeps. So we have to make decisions on our money, or it will just deteriorate in value. Clearly, as they're printing trillions of dollars. If you're a long-term investor, I don't see a reason to truly worry, as historically stocks and bonds have always returned to higher values. So you can not lose some sleep on that at least. And I can say also that if stocks truly do bottom out, it'd be a great buying opportunity as well. Others are saying that there's a possibility for cryptocurrencies to skyrocket during this crisis, including Ethereum, Bitcoin, and the list goes on and on and on. So yes, this is possible. However, I really wouldn't bet my house on this, as their value long term is a little bit sketchy. Next, the most clearest, safest choice, something like silver or gold, or the precious metals, which have historically always done the best. Well, we'll see. If negative interest rates really do get low, then I think, yeah, we'll be up there. Other thing I want to mention, if you ever saw this movie, you'll know what I'm talking about. But if you haven't, go out and watch it, because I really think this movie made in 2006 has truly, truly done a great job at predicting the future. Check it out.
Your monkey ass. What the hell is going on with this election? I hear these candidates talking about jobs all the time. Jobs this and jobs that. I don't give a damn about no jobs. People don't need no jobs. I'm gonna tell you what people need, huh? People need money. Lots and lots of money. That's why the only jobs I'm gonna create are gonna be down at the mint. That's right. We gonna print so much damn money, I'm gonna give every single American $1 million. Check it out. Ain't gonna be no more 1%ers. Everybody's gonna be million percenters. And then everybody gonna be rich. And nobody gonna have any more problems. And you ain't gotta worry about no damn health care or nothing. And then we gonna have a big ass party with all us millionaires.
So the main point of this video, be prepared, protect your money, make smart decisions, and prepare yourself for the future, because there are risks out there. Please stay safe and healthy, and if you haven't, please like, subscribe, and comment. Thank you so much, all of you, for your support.